All right, let's dive in. The crypto market is staring down the barrel of what might just be the most important month of the entire year. You see, December isn't just about wrapping up the calendar, it's a major crossroads. We've got a series of huge events that could either send Bitcoin to the moon or, well, trigger a pretty nasty correction.
The whole story for the month, really, it all comes down to three specific moments. And believe me, these are not just random dates you can ignore. These are high-stakes events that every single investor needs to have circled in red. So the big question is, what are they and what could they mean for your portfolio? So here's the roadmap. Think of it like a three-part gauntlet that the market has to run through. First up, we've got the big one, the Federal Reserve's decision on interest rates on December 10th. Then, just a few days later, we get a reality check from the latest inflation data. And to top it all off, we have a major strategic deadline for investors on December 31st. Let's break down each one. Okay, first up, the main event. This is the day the entire financial world, not just crypto, is going to be holding its breath. What happens here isn't just news for a day. It's the big domino that could set the tone for the market for months and months to come. Every single eye is locked on December 10th. The Fed's big meeting wraps up, and at 2 p.m. Eastern, bam, we get the decision on interest rates. Seriously, you can't overstate this. It's the single most important catalyst for the entire month.
Now, here's where it gets really interesting. The market isn't just sitting around hoping for good news. It is absolutely expecting it. Right now, the odds are sitting at a massive 87% probability that the Fed is going to cut interest rates. The market has already priced this in. So what even is a rate cut? Well, to put it simply, it's the Fed making money cheaper to borrow. And historically, whenever we get this cheap money environment, it's like rocket fuel for investors. It encourages them to move into riskier, high-growth assets. And right now, that means Bitcoin.
And this lays out the two completely different worlds we could be living in after that 2 p.m. announcement. If the market gets the rate cut it's banking on, the bulls are off to the races. But, and this is a big but, if the Fed throws a curveball and decides to pause, we could see a seriously violent reaction. We're talking a potential flash crash right back down to that critical $80,000 support level. So, you might think a rate cut means it's time to celebrate, but hold on, the party might not be guaranteed to last. Let's move on because there's a second, super important test right around the corner that could change the entire vibe in an instant. And this is the million-dollar question, isn't it? A rate cut on December 10th might feel like victory, but what if it's a fake out? What if the underlying economic numbers just don't support all that optimism? And that brings us to the CPI report. That's the Consumer Price Index. It's basically the government's official report card on inflation, and it's due out mid-month. This number is going to do one of two things. Either it's going to confirm the Fed made the right call, or it's going to throw a massive wrench into the whole plan. You see, this one data point creates what some analysts are calling a volatility cluster. If inflation comes in cool, it's like a green light. It confirms the rally and the path forward looks pretty clear. But if that number comes in hot, oh boy. Fear comes rushing back into the market. People start worrying that the Fed might have to hike rates again next year, putting this entire bull run in serious jeopardy. Okay, so we've got the Fed and inflation. Those are the huge macro forces. But there's one more key factor we need to talk about as we get to the end of the year. And this one is all about the tactical moves that investors themselves are going to be making. This is the final play of December. That December 31st deadline has nothing to do with the Fed or the economy. Nope, this is all about taxes. It is the absolute last chance for crypto investors, in the US at least, to pull off a really smart move to lower their tax bill for the year. The strategy is called tax loss harvesting, and the idea is actually pretty simple. You sell some of your investments that are down for the year to create a capital loss. Then you can use that loss to cancel out the gains you've made on your winning investments. So here's how it works in 3 easy steps. 1, you look through your portfolio and find assets that are in the red, like some of those old altcoins you bought. You sell them before the deadline. 2, that loss you just took gets used to lower your taxable gains. And 3, the result is you pay less in taxes. It's pretty cool. And get this, the really crucial part is that because crypto is technically property and not a security, the wash sale rule that stops you from immediately rebuying a stock doesn't really apply. So you could sell, get the tax benefit, and then jump right back in. In fact, the source material for this actually describes the whole thing as a massive free money loophole that tons of savvy crypto investors use every single year. It's a powerful strategy, but that window slams shut at midnight on December 31st. So, after the market survives the Fed's decision, digests the inflation data, and weathers this wave of tax loss selling, what does it all mean for the price of Bitcoin? Let's put it all together and look at the two numbers that are going to define whether this month was a success or a failure. After running through this December gauntlet, the fog is going to clear. The battle lines are drawn, and pretty much everyone is watching two very specific price levels to see if the bulls really managed to win the year.
Now, the bull case. It is wildly optimistic. If the Fed cuts rates and inflation behaves itself, creating that perfect, cheap money cocktail, some big-name analysts like Arthur Hayes are still on record calling for a possible run to $250,000. That is the absolute dream scenario.
But then there's the other side of the coin. There's a critical line of defense. That $80,000 level, that is what analysts are calling the line in the sand. If the market turns south after some bad news, this is the price that the bulls absolutely positively must hold to keep this whole long-term uptrend alive. You know, the path for December is actually incredibly clear. We know the key dates, we know what's at stake, and we know the numbers to watch. So the only question left is this: will all of this come together to create the ultimate launchpad for new all-time highs? Or is it all just a perfectly laid trap for bulls? I guess we're all about to find out.